In this video, I will be discussing the allowance method. Using the allowance method, at the end of each period, we will estimate total bad debt expense expected to be realized from that period's credit sales. Two advantages to the allowance method are bad debt expense is recognized in the same period when credit sales are recorded. And also, accounts receivable is recognized at net realizable value. That's the amount of cash that we believe that we'll be able to collect. Sales on account raises the possibility of accounts not being collected. In the allowance method, we want to value our accounts receivable at net realizable value. In this case, $475. We know that our accounts receivable of 500 includes some deadbeats, and we need to write down to net realizable value. Well, how do we get this allowance for doubtful accounts of 25 in the balance sheet? Through this journal entry: debit, bad debt expense, credit, allowance for doubtful accounts. The allowance for doubtful accounts is a contra accounts receivable account. So how does net realizable value look on the balance sheet? It looks like this. We have accounts receivable of 500 less allowance for doubtful accounts. Then gives us our net realizable value of 475. The other method that you can use to show net realizable value is to simply state the net realizable value of 475, and then in the description of accounts receivable, say that that amount is net of a $25 allowance for doubtful accounts. Let's go through an example. TechCom had credit sales of $300,000 during its first year of operations. At the end of the first year, $20,000 of credit sales remained uncollected. Based on the experience of similar businesses, TechCom estimated that $1,500 of its accounts receivable would be uncollectible. So our journal entry for the estimate is debit bad debt expense and credit allowance for doubtful accounts of $1,500. Below are the two ways that TechCom can present accounts receivable on its balance sheet. The first way is to show accounts receivable of $20,000, then less the contra receivable account, allowance for doubtful accounts, to get net realizable value of $18,500. The second way is just to list the $18,500 net realizable value and then in the description, just say that it's net of $1,500 of doubtful accounts. For right now, I want you to memorize these two journal entries. To record the estimate, we debit bad debt expense and credit allowance for doubtful accounts. When we write off an account, we'll be debiting allowance for doubtful accounts and crediting accounts receivable. Let's assume that we have accounts receivable of $500. But we know that of the $500, we believe that $25 are going to be uncollectible. Well, how do we get that $25 that's going to be uncollectible into our allowance for doubtful accounts? Well, through our estimate, where we debit bad debt expense and credit allowance for doubtful accounts. Now later, one of our accounts goes bad on us. In this case, it's I'm a flake. And so we have to write off her account. And we're going to do so with this journal entry: debit allowance for doubtful accounts, credit accounts receivable. I'm a flake. Okay. Now, what do you guys think? If we wrote off I'm a flake, what's going to be the effect of net realizable value? It's the same. Why? Because I'm a flake, that deadbeat, had already been written off. IMA was part of this original estimate of $25. So basically, when we write her off, we're taking her accounts receivable off and her part of the allowance for doubtful accounts. So after we write her off, net realizable value stays the same. Let's run through an example. TechCom has determined that Jay Kent's $520 account is uncollectible. So we debit allowance for doubtful accounts and credit accounts receivable. The write-off does not affect the realizable value of accounts receivable. Note that the accounts receivable balance goes down, but also the allowance for doubtful account goes down for the same amount. So net realizable value remains the same. To recover an accounts receivable that had previously been written off, you first reinstate the accounts receivable and then record the payment. The reinstatement is just a reversal of the write-off. In this case, debit accounts receivable, I'm a flake, credit allowance for doubtful accounts. Once the accounts receivable is reinstated, you can record the payment and reduce accounts receivable by debiting cash and crediting the accounts receivable. Let's go through an example. On March 11, Kent pays in full his $520 account previously written off. The first journal entry is to reinstate the account previously written off. Debit accounts receivable, $520. Credit allowance for doubtful accounts, $520. Next, we can receive the payment against the account. Debit cash, $520. Credit accounts receivable, $520. Let's go over one more example. A retailer applies the allowance method in accounting for uncollectible accounts. Prepare journal entries to record its following selected transactions. On December 31, the retailer estimates $3,000 of its accounts receivable are uncollectible. So let's record the estimate. Debit bad debt expense, credit allowance for doubtful accounts. On February 14, the retailer determines that it cannot collect $400 of its accounts receivable from a customer named ZZZ Company. To record the write-off, debit allowance for doubtful accounts, credit accounts receivable, ZZZ Company. On April 1, ZZZ Company unexpectedly pays its account in full to the retailer, which then records its recovery of its bad debt. Remember that the recovery process is a two-step process. First, we have to reinstate the receivable by debiting accounts receivable and crediting allowance for doubtful accounts. Once the accounts receivable has been reinstated, we can collect the cash and reduce the accounts receivable. The end. Happy studying, everyone.